Welcome to The Business. I'm Elise Morgan. Coming up on the program, the bank loans that shouldn't have been written, the lax lending epidemic in the sights of the Royal Commission. And Australian business taxing trust, the stoush brewing over the campaign for corporate tax cuts. Money laundering, financial planning rip-offs and market manipulation. They're all damaging scandals which have taken a toll on the reputation of the banks. But the potentially more destabilising and costly problem of irresponsible lending could soon be laid bare by the Banking Royal Commission and court action. Royal Commissioner Kenneth Hayne has singled out lax lending as a key issue when the inquiry gets underway in less than 2 weeks. It's a practice made possible by the reckless overstatement of incomes on loan applications, a phenomenon suggested by the bank's own numbers on the incomes of their customers. Here's finance correspondent Philip Lasker.
Meredith Campbell has been battling her lender Bankwest for years.
Even with my joint income with my partner, we both could not pay the loan. I went to 4 lawyers in the last 11 years and each lawyer said I was set up for bankruptcy.
The 54-year-old hairdresser had 2 properties with a former partner, including her house. She says that without her consent, the bank included her house as security over the other property, which lost 50% of its value. The bank now wants both properties, leaving Meredith in a predicament she should never have faced.
The broker wanted to push the loan through, but if the bank had have checked our income details correctly, the loan wouldn't have been approved.
It's like something out of The Big Short, a film focusing on events leading up to America's housing market collapse, when hedge fund investors questioned mortgage brokers about loans.
So do applicants ever get rejected?
Seriously? Look, if they get rejected, I suck at my job.
I don't get it. Why are they confessing?
They're not confessing.
They're bragging.
Analyst Martin North says if the Royal Commission does its job, it'll uncover a problem far bigger than any of the bank scandals exposed to date.
If you look at all the data that's out there, a considerable number of loans that have been written by the banks in recent years should not have been written. And so I think it's fair to say that irresponsible lending is indeed endemic.
Around half the mortgages in Australia's $1.7 trillion mortgage market are written by brokers, incentivised to write the biggest loan possible. The more banks lend, the higher property prices go and the more money they make. It's been a virtuous circle.
We're seeing a lot of households who are actually getting loans at 5, 6, 7, 8, 9 times income. That is astronomically high and, in my mind, will lead to grief later.
Analysing data from the banks, the tax office and the census, investment bank UBS concluded lenders reported an unrealistically big proportion of high-income customers, which was inconsistent with income groups highlighted by the ATO or the census data.
I have seen some analysis which points out that if you were to have a look at the bank's credit underwriting practices, it must imply that everyone in Australia earns a ridiculous amount of money.
The bank's numbers also suggested an absurd 42% of households earning at least $500,000 per annum took out loans last year alone. Banking Royal Commissioner Kenneth Hayne has identified irresponsible lending as a key issue, and the regulator ASIC is pursuing Westpac over alleged breaches of responsible lending laws.
If a bank has provided credit to someone that can't reasonably pay it back, then the whole contract can be voided. So what that basically means is that it suddenly goes from being the borrower's problem, potentially being the bank's problem.
And that opens a Pandora's box. The Royal Commission and ASIC's case against Westpac will enhance our understanding of what constitutes irresponsible lending, which could trigger a proliferation of legal action.
I don't think the lending standards in the banks morphed quickly enough to the new situations. I think the regulators were very slow to come and bring to bear pressure on the market. So there is a big slug of loans that I think you would say were unsustainable and therefore unsuitable.
Morris Blackburn lawyer Josh Menon is seeing a growing number of victims.
And when we have a look under the bonnet and see the credit that they've been given based on their income and their expenses, the lack of surplus income that they have, we believe that they have legal cases.
A UBS survey concluded that 1 in 3 people submitted inaccurate mortgage applications, so-called liar loans, that could be worth $500 billion. Meredith Campbell says she's in a world of pain because of other people's lies.
Now the bank said, well, we can just sell your house now, and you know, basically they're bullying me.
The Royal Commission and ASIC's court action may well see a shift in the balance of power.
Philip Lasker with that report.